I'm going to talk about two things. One is the link between macroeconomic policies, and the second is the link between financial sector liberalization and income inequality. So just upfront, those two are what I'm really focusing on. Let's start with the fact, okay? And this is not university, this is ADB. So if I'm presenting fact, I have to present fact which is happening actually in most Asian countries. By the way, it's not most Asian countries, most emerging market economies, even in Latin America, in Africa. Fact number one, income inequality has been worsening everywhere, across the board. So that's fact number one. And also in some countries, and this is not across the board, but most countries, the employment elasticity has been declining. Those who are not familiar with the concept of employment elasticity, basically a number that shows how many percent employment is created for 1% increase in the economic growth, like GDP and so on. That has been declining, okay? So that's fact number one. Fact number two, and this is more policy. You travel around Asia or even around the world, what you see is that the king is really macroeconomic policy. I mean, just simple thing. Who is the most powerful ministry in any government? It's usually Minister of Finance, Central Bank. So those macro managers, basically, they are the most powerful. Now, when they implement particular policy, and there are some repercussions, and the repercussion is negative, and I'm talking about social repercussion, like inequality, environmental destruction, and so forth. What do? They come up with compensating policies, okay? So this is a fact, it's everywhere, okay? And that's the reasons why everybody, including ADB, as I understand it, is trying to work on this compensating policy, whether social protection, environmental protection, anything, okay? That is fine, but when you see the fact that I mentioned to you earlier, income inequality continue to worsen, environmental conditions continue to deteriorate, I think it's about time to reassess the whole notions of this, you know, powerful macroeconomic policies and so forth. So that's really my passion. I've been doing this for the last 20 years and so forth. That is, how is really the link between macroeconomic policies and the social indicator, especially poverty and inequality. Now, those who are economists knows very well the most powerful and practically used, I'm not talking about academic or theoretical, but practically used by policymakers, macroeconomic policymakers, is the ASAD, aggregate supply and aggregate demand. So basically, when the economy is in bubble, you try to contract the economy by shifting the aggregate demand to the left. Vice versa, when the economy is in recessions like what it is now, all policymakers trying to shift the aggregate demand to the right, that is to expand. That's fine, and the purpose is really to stabilize the macroeconomy and to some extent to achieve growth. But as I said, how come the inequality has been worsening? You know, if you talk to economists or people in the street who knows a little bit about economics, I bet if you ask the following questions, they will be flabbergasted and they will think twice. What is the answer? Ask them, what is the relation between macroeconomic policy and poverty? Why? Because there is none. There is no textbook in economics that tells you what is the link between the two. And yet, reality is that, as I indicated earlier, those two facts are everywhere. So, in a way, I'm a little bit embarrassed being an economist. How come my discipline does not deal with these issues? Okay? So, the starting point here is, as I said, okay, let's look at those macroeconomic tools, ASAD and so forth. Let's think about this. Suppose the economy is in bubble. Okay? Many countries in Asia, like in Japan in the early 1990s, it was in a bubble. So what did the policymakers do? Well, they tried to shift the aggregate demand to the left, be it raising the interest rate or contract the government spending, right? The purpose is, as you can imagine, if you did that, then the price will go down, right? Of course, the price they have to pay is that the economic growth is also slowing down, but after all, that's the main purpose of contracting the bubble economy, right? That's it. And if they achieve that, they're happy. It doesn't matter whether the poverty will increase, income inequality will be worsening. Because if that happens and politically become very sensitive, what they do is, let's think about compensating policy. And if necessary, let's ask ADB for advice. What kind of social protection, what kind of... So, this is a standard practice. What I'm trying to propose here, just think outside the box. Why don't we start reassessing the macroeconomic policy itself? More specifically, maybe the question is the following. Is there any macroeconomic policies that can stabilize the prudential macroeconomics, that can maintain certain level of growth, but at the same time it's not deteriorating the income inequality? Is there any question? So that is the question that I'm interested in. You can call it inclusive growth, you can call it sustainable growth, I don't care what's the name, okay? But that's what I'm interested in. Now, I know this is not the forum to talk about theory or models, but basically it's based on the model and theory. What I can share with you is really the essence. What is the essence of that models and that theory? If I may use this. So this is what Economics 101 has been telling us, right? If there is AS, aggregate supply, there's aggregate demand. When the economy is in a bubble, what you do is contract the economy. So what you do is shift the aggregate demand to the left. Because what you expect is price will go down, and the price you have to pay is output will go down. That's fine, okay? But I'm proposing, why don't we extend this analysis? There are many dimensions of poverty, and I'm aware of it, but of course we cannot tackle all this, okay? So let me just use very simple concept of poverty, and that is poverty incidence, which has been used by the World Bank, by international organizations, which simply defined as the number of people living below poverty line. So when you use that simple definition, basically two key variables matter. One is the poverty line itself, right? And then the income or expenditure of the household. So in other words, if the poverty line increase, ceteris paribus, nothing changed, conceptually the poverty incidence will increase, because those people who used to be above poverty line now below poverty line, right? Vice versa, if the poverty line remains the same, but the income of many of the households used to be above the poverty line decline, poverty incidence also increase. Okay, as simple as that, right? So, poverty line and the income of the poor, those two are critical variables. So what I'm proposing is that, why don't we extend this wonderful macroeconomic tools by introducing poverty line and income of the poor? In other words, what I'm saying here is that, all right, if the inflation, which is the key target of many central bankers around the world, if they want to reduce the inflation, fine. But please look at also the impact on the poverty line. So in other words, I don't know whether the relationship between inflation, which is this vertical line, and poverty line is concave like that, or maybe convex. I don't know. And that is an empirical question. Each country has different relation between the two. If you have concave, you reduce the price certain level, let's say alpha, and then you reduce the poverty line beta, and beta is greater than alpha. Wonderful, do that. But if you have a convex, be careful, dangerous, because what happens is that you reduce the poverty line only slightly. Now, that is only half of the story. Remember, two indicators. One is poverty line and income of the poor. So let's see what happened with the income of the poor. Again, this is the same thing. It can be convex, it can be concave. We don't know. That's why each country are different, and that's why we have to go to the country and then try to understand. The same story. If you reduce the output, because that's the price you have to pay if you try to contract, if the economy is in bubble, you have to look at what is the repercussions of reductions in the GDP on the income of the poor. If the reductions in the GDP is less than the reduction in the income of the poor, so in other words, the income of the poor declines so much, be careful, don't do it. Even if you achieve lower inflation, because what does it mean, low inflation for 70%, because most of Asian countries, 70% are still middle and low income group, right? Unless we revise the definition of the goal of development. I thought the goal of development is welfare for majority, right? So unless we change that, then something is not right with this concept. I know I'm taking very risky position here, because this has produced, I don't know, 20, 30 Nobel Prize winners, okay? I'm not criticizing that. I'm simply proposing, please do extend that analysis, especially for developing countries. These theory, these models were developed by those smart people in different kind of environment. Poverty was not number one enemy. Income inequality was there, but it was not serious. But in many developing countries, including in Asia, those are serious things. I live just across the street in Oakwood. Every morning I wake up, I see the big sign, ADB, Pacific Asia Free of Poverty. But when we talk about financial issue, financial crisis, and why I'm missing that? I thought everything has to be linked to that. And colleagues in ORE knows very well, since day one I arrived here, I keep reminding them, whether you're talking about bonds market, whether you're talking about capital market integration, please do think what is the implications on that, because that is the ultimate goal. I know some of the explanation is that when you talk about poverty, inequality, it's not sexy. But when you talk about bonds market, you talk about macroeconomic stability, you go to the IMF, you go to the World Bank, that's wonderful. But, you know, go to these countries, you have different perception. So that's the first one that I'm trying to say here. Of course, in this short time, I cannot elaborate further. Now let's move to the second point. And that is the link between financial sector liberalization and income inequality. I think everyone knows, around 1980s, almost all countries, emerging markets as well as developing countries, raising the flag of financial liberalization. The IFIs, the IMF, the World Bank, it's raising that flag everywhere. Some countries did it, some did not. Some countries planned to do it, and then after the Asian financial crisis, they did not. China is the example. So, what is the question here? Why there is some problems with the financial sector liberalizations? Here is my argument. You know, if I look at the flow of funds in almost all countries, clearly after the 1997, we are seeing completely different movie than before 97. The movie that we were watching before 97 is a movie of excess investment. How could that happen? Well, most of these countries borrow from abroad. They borrow in foreign currency, short-term and unhedged. And that's why it led to the Asian financial crisis, right? That was the movie before 97. Now, the movie is completely different. So this sequel is almost like unrelated here. Now we are seeing excess saving everywhere. Household saving, corporate saving, everywhere excess saving. How could that happen? Natural question is, where does this excess saving go? If the investment is 100, the saving is 150, where does this 50 goes? Guess what? Most of them goes to financial asset. Thanks to the financial innovation, thanks to the financial sector liberalization. Now think about this. Mutual fund, hedge fund, stock, bonds. I don't know, from the countries where you come from, just ask yourself, how many % of the population in your country really have access and participate in those financial sector? Mutual fund, bonds, stock, hedge fund, and things like that. How many %? Now, that very sector has been growing fast. It's even faster than the growth of GDP. We have the chart. So, this is typical chart is like this. This is the growth of GDP. This is the growth of financial sector. And this is only for Asia. And I guarantee for the entire world is the same like this, especially after the financial liberalization. Okay? What is interesting is that if you match this chart, so this is financial sector, this is the output. If you match this chart with any measure of inequality, let's take the simple one, Gini index. You can see the Gini index is going up. What is the story here? The story here, when you have excess saving, and most of the, let's assume the excess saving is $1 trillion. And if most of this $1 trillion goes to the financial asset, vis-a-vis the same $1 trillion goes to factory, open business and so forth, which one is more employment creating? Of course, financial economists will argue with me the following. Well, imagine if the money goes to the stock market. That money can be used by the company who has this IPO and who has the share bought by you, and then that money is used by the company to expand. They can hire and so forth. Guess what? It didn't happen. Majority of the income raised by the company from the stock market reinvested in the financial asset. Why? Because they're making a lot of money. They don't have to have the headache dealing with labor. They don't have to deal headache with the taxation, with the government regulation and so on. Very easy. Financial sector. So, the other 70 or 80% of the society has no access whatsoever. It doesn't need a rocket scientist to imagine what is the repercussions on income inequality. That's why I'm not surprised at all when I see the results of this. And this is for Asian countries, because we did calculate for the entire Asian countries. Financial sector is doing very well. Growth, the economy is doing okay. Post-Lehman collapse, 2008, you know the story of the double track growth. Asia doing very well, whereas industrial countries' growth has been very slow. Unfortunately, I'm hearing that more and more than I'm hearing income inequality worsening in Asia. Environmental condition is deteriorating in Asia. Of course, I heard that some, but more dominant, especially in the World Bank, IMF annual meeting, more dominant about double track growth and so forth. That is fine, but I'm just humbly share with you, I'm a bit disturbed with that. And I have to admit, I'm a little bit embarrassed being an economist, because we economists don't seem to really either care or respond properly to this fact.